Right. So today is today is the 5th of April. So looking at some of the plans, the trade ideas that were generated, I'm going to go through, say, a couple of them. Some are live, some are private. And the reason why I put some of them private is because some of my thoughts are premature. And when I'm doing the wave counts, uh, it may take a while for them to play out. But when people view the charts, they might be a bit keen to take a trade, but actually the time is not right. So that's why I put some of them on private, and I try to put the wave patterns that I think are more complete. Uh, those are the patterns that I will try to put out so that it's closer towards the time when price is supposed to go to where I think it's supposed to go. Right. So let's just have a look at this one. It's euro dollar. Right. This one has. Let me just. Basically, just looking for it to come out. See what happens here. Now, of course, I'm looking for the upside. Pretty standard. But let's see what actually happens. So price actually dropped. So basically, anywhere in this zone is where you're supposed to start. Idea is to start building up the buys. Right. Naturally, this is where you don't want price to be to get to. So I would say this move right now is not the healthiest for the upside. However, I can't see too far to the left. However, these things sometimes what they might do, they might crawl and then they might just break up like that. So that's also a possibility, right? So, but right now, I still bias the upside for euro dollar for now, right? So one way is to, as this one goes, is to go up, take profit, it pulls back, you buy, goes up, take profit, because these things go up in a sideways fashion, right? See, it never comes down clean. This is on a 5-minute too. So I think it's good to be a trade on the lower time frame because then we'll be able to be more clinical in our entries. 5 and 1 minute for entries. But always have always have a mind on the higher time frame as well. All right. So right now, I think this one, at least as it goes up as a correction on a higher time frame. This could be a correct structure as it goes up. But what I want to do actually is if it goes up, I'll exit, comes back, I'll buy it again, I'll buy it. So instead of keeping from the bottom to the top, I'll exit, take profit, comes down, take profit, comes down. I just keep buying in. So there'll be, I'll be able to take more trades basically. In the sense of buying one at the low and keeping all the way to the top. That's also a strategy of its own. Right? So just different styles of entries. So this one, Kiwi dollar wanted to come down here, make a double bottom, especially make a double bottom. So any buys here, actually the stop has to be somewhere lower. You have to measure what this risk is going to be. And then what you want is for this to be double bottom and just go up 1, 2, 3. Then of course you hope for it to drop. Now this one could also could this be a structure like that? Could this be a 1, 2, 3? And then this is actually going up, giving a trend this way. But that's possible too. So if this one, so what I'm painting here, this could continue up like that. I see that as a possibility. However, see, if I was a institution and a lot of money, what I'd like to do is I would like to sell high. I want to buy it low. There are a lot of stops over here. And if this was actually a structure to go up to the upside, and if it could stop people out, if there are traders who are on the right side actually, who are in the buys, their stops must be over here. The sell stops, you see. So if I wanted them, if let's say we want to force traders out of the positions, force them out of their buys and make them sell. so that I can buy, so that the institutions can buy, so they can buy low, then they can sell it high. This is the best place to come. This is the best place to force price to. So this trade idea is basically trying to force retail traders out of their positions. So once you can force them out, for those traders who are actually on the right side, so let's say something like this, all right? You see, so people are saying, oh, it's if you look at that, right? Oh, so it's there. It's supposed to go. No, it's trending up. So this is like the maximum pain right over here. If you can get price to come all the way down to this level, you can take out all the buy positions, force them to sell it at a low price because the sell stops are over here. Then we can buy it, take their positions, and then this is where we hope that price will actually start to turn and hit for upside. So this is a good amount of profit right there. So this whole trade idea is just based on that. Now, what if this one just simply goes well, and this is all the correction? Well, then right now price action is over here. Right? See that? The price action is over here right now. So right now over here, you can start looking for the buys, right? Using any entry ways to confirm the entry that this is actually starting to turn. So if this goes, then that's good, right? But if this one starts to go over here and start to show signs that it's going to turn, then you want to exit the trade, right? Because then this might not be the one that's going up. Maybe it comes down here, then this is the one that's going up. This would be a better buy at the bottom. Okay. So, right. Pound yen. This one I set on private. Sometimes, let me see what's happening over here. Okay, so this is for my personal reference. I think it's a little bit tricky for now. A little bit tricky. 1, 2, 3. This could be all the correction. This could be coming down, just like the what's that? Just like the euro dollar. If you look at euro dollar, okay, I'll have to. If you look at euro dollar over here, let me just go to the 4 hour. So this is the 4 hour chart for euro dollar. So this is what price action did. It went up, and then it came down this way. See that? So when I look at pound yen, let's go look at this one. See that? So I'm thinking this could be doing something potentially like that. So even though I put this arrow up, but I think that this is actually a good move to try to take. So as it makes its way down, to get to a level that could interest me in a buy, somewhere over here, I think this is a good move to try to sell. So even though I put the arrow up, but actually now that I come back and look at the chart, I'm actually thinking that this is a good move down to try to sell this down. Because you refer to euro dollar, yeah, okay, here, and then followed by that. So if I look at this again, see, followed by that, down. So we always got to be careful when levels like this are broken. Means it is usually significant. It's significant because there's definitely stops over here. But people who were the sells are forced to buy. So when you have sold, you actually, whether it comes down strong, whether it comes down sideways, its price action should still come down. So because if you sell high here, right? So let me see. Yeah, if we sell high here, you want to buy low here, basically. Okay. Anyway, so let's see how we can sell the pound yen, right? So let's go look at the pound yen. So this is what pound yen looks like right now. 1 second. Let's see what we are getting. 1, 2, 3, 1. Okay. Okay. Question is this the move that's coming down? Let me see. So let's say if I put on some pips. Yeah. Two, three. To confirm a sell, what you need is something stronger. Something that come down here, something that pull back this way. That will make a safe sell. Now this one could just come down straight like this as well. All right. Or it depends on where we get a correction. If we're lucky, we get a correction a little bit higher. If we're not so lucky, then we get a correction a bit lower, which is not what we want actually. So we hope to get this piece here. Something like this. So we hope to get a piece somewhere so that we can take the sell that confirms the downside. We are looking for the downward move. Okay. Okay, let's look at Aussie Kiwi. So Aussie Kiwi basically over here, if you had taken a buy, that would be great. But if let's say price action was over here, it was crawling, you don't really want to buy it here. You're actually hoping for it to come back down so you could buy at a low price, right? Could it have fallen? Yes, it can. It can. You can always do like a 1, 2, and then a 3 up like that. That's always possible, and that would have been a good buy. But if you have bought a buy over here, that'd be perfect. And I think last was actually done somewhere. Let me just check. Aussie Kiwi buy here. Here it is. So if you have taken a buy, let me just click that. This will be a perfect. So first, slow it down. From here, take the buy up. There'll be some drawdown, but see, there's a drawdown right there. But you would have been prepared for it anyway. The lot size needs to be prepared for such things because double bottoms and such they can always happen. Okay, so if you took the buy here, you can actually see the trade that's done on forex-family.com. Right, you can go to the link and see when and how the trade was actually taken, right, on this link. What I'm hoping for right now is naturally because it's on the crawl, it could keep crawling to the upside. That's true, but what I really hope for is I hope for this to happen somewhere around here. Take out some stops because there are going to be people in the buy who maybe bought anywhere from here, but anywhere their stops are probably right here. So what you want to see is price action coming to take out these stops because these are all buys. So if they're forced to sell, then you can take the buy. Then so the idea is to buy it here. For me, is to exit there. So if your 10, 50, or 100 lots, whatever it is that you're trading, right, comes back down here, stop these people out, then you try to get in for this move up like this. Once he gets there, pulls back, try to buy again. So I don't really keep trades all the way to the very top because Aussie Kiwi buys negative swap as well. And when you are trading lots of a certain size, that swap can be quite scary. Talking about 11, $15,000, $20,000 worth of swap. That means even if you make 80K in profits, that's 80K minus 20,000 or minus 15,000. If the timing is not perfect, you're gonna lose about 10 to 15K in interest that we're gonna pay the broker. Or so okay, so let's go back. Let's go back to the most recent Pound Cat. Pound Cat's very interesting. I'm now the difficult thing about the Pound Cat sell is that the swap is again negative, right? So Pound Cat buys at this time, I believe it's positive, right? But so for me to take the sell, it has to be at a perfect time. You see, if I want this to be broken, what you really want to see is more action here before we actually take that sell. So it's not that I don't like the sell, but if the timing is not right, then swap really kills, man. Yeah, stop really kill. So right now, what I want to see is this is actually good. This is actually good. This is actually pretty good. So this is some levels over here. So if this one happens to pull back, I think this now makes a good sell. Now, originally, I felt that this price action, this could be the correction, this could be going up. But so what you want to see right now is for this to stay longer over here. You want to see it stay longer over there because the longer it stays there, the better it is. You know, the if it just moves away quickly like that, then this A like this A these are like stop hunts basically. If this was going to be a sell that's going to go down to somewhere around this level over here, well, what the institutions need to do is to get people stopped out basically. So let's say the real move is going to be is the sell. This is the sell. This is the real move. Well, the people who let's say the people here who are being stopped out, you see, basically. Yeah. So let's say if this one makes a credit structure the upside, basically if a retail guy try to sell, and let me just make that clear. Let's say this one goes up like this, like a credit structure like this. It's really what you want to see here. Because let's say I sold here, but then I got stopped out. Because I stopped, this what I'm told, I'm stopped out here. So this will be a buy stop for me. So if I sold, then I was stopped out here. Someone would have taken a sell. Then let's say over here I try to sell again, then I got stopped out again over here. So somebody took the sell. So if I sold here again, but then I got stopped out because price actually came out and took out my stop loss again. Well, someone took the sell over here. Well, then each time this goes up, each time I'm getting stopped out, until I give up and then I see this just collapse. So this is what the institutions need to do, you see. And this can even go up this way and break this top. Now the institutions will be in drawdown because if the real move is the sell, this is the sell, this is the sell. So if they were selling all the way to the top, yes, it's true they would be in drawdown, but they're a casino. They know that ultimately price action is going to get from here to there. So even though they're in a loss, but imagine playing poker, knowing what your cards are, knowing what my cards are, knowing what everybody's cards is, they ultimately know when this one comes back, all this is going to become positive. Even though right now they're in negative drawdown, right? Negative drawdown. But so long as price action can get from there to there, everything will be okay at the end. And they can see all the cards, right? All the cards on the table. So the point is I'm trying to say is that trying to predict this top, saying that this is going to go down is not the right way. Not the right way, because this move down is the first move. What you want to wait for is the opportune moment where you actually see the white in your enemy's eyes. You see it's right in front of you, and then all you got to do is to bend down to pick up the money. That's the optimum trade. It's what we need to always. You need to strive to achieve that. Can we get it all the time? No, I don't get it all the time. Sometimes I screw things up as well. But this philosophy of waiting for these structures to occur, because this shows that people are getting stopped out of their trades and something is being built. The idea of the bigger move is the downside, and then people are being stopped out of their trades. This is what you want to see, generally. Unfortunately, right? So this is what we're hoping for, all right? For something like that to happen, and then we're going to shift our projection to the downside, right? Okay, pound cat, silver. Oh, this is something that didn't work out. It would have been a nice trade, but as you can see, we all need some kind of confirmation. This is why confirmation is important, because now we drop to the low, and what happens? If the bigger move was to the upside, guess what happened? If you were forced to sell over here, someone took your buy. Someone took the buy. So someone was able to buy at the low because we wanted to buy, but we are stopped out, and somebody else, smart money says, I am no fool. I take the buy. And ultimately, when this one gets up there to 16 or 17, 18, whatever it is, well, they bought at a low, they're going to sell at a high right there. So, but for us, what we want to do is we want to wait for the perfect timing. We want to wait for the perfect timing. So even if this cross, it goes up like this, whatever I said over here can be repeated over here. Again, you're looking for the upside, right? So let's do just another slot here. Shall we do all of them? Well, it's just too much. Okay, let's just look at this pound cat. A pound cat this is just a continuation, basically, about this upside, about this one at this point crawling up. Is that possible? It's possible. I mean, all this is very possible. Let me see. Yeah, it's all possible right there. So it's all possible. So in order to actually take this sell, what you want to see is a slow crawl. A slow crawl. Maybe it crawls and even to break this top. That's also possible. So you want to see drop, you want to see another one. That will be a good sell now. That will be a good sell now. Okay. Pound dollar. When I was doing this chart, pound dollar to get a pound cat, the idea is that the idea I had was like this. You see? So if this one was to go up and make a crawl, I would have liked that movement up. And that would have coincided with this pound cat trade that I felt could still continue. So if this was gonna go sideways, and if I get a correlation from pound dollar, that this was gonna go sideways, then I was looking for the upside for both of them. All right. But right now, so let's see what actually happened. So to me, pound is in a position right now from a wave study point of view where it could actually go both ways. It could do this here, sideways. It could go up, or it comes here and then down. 1, 2, 3, 1, 2, 3, and 1, 2, something like this. 3 waves, 1, 2, 3 here, and then maybe it's a one wave or preferably one here, then it goes down again. So right now, you need to actually wait on this. So from here would have been a good buy to this level. Let it break out and let it do a sideways. But this is not confirmed. So if taking a buy, you got to exit right here because the trend line would have been somewhere here this way, right? And there's going to be some levels over there as well. Right. So once you got this trend line this way, here you got to exit, but you have a trend line this way. So and this is also a level of liquidity gap over there. So you got to exit right there. So if this was to go here and do sideways, well, that means it's going down. That means next week you'll look for if this is going to go sideways and down, or if it's going to shoot up, sideways and up. So one trade that is possible to take is this one. You could take it to around here. So small trade up. But then you got to exit because you got to see what this actually is, how fast, what the angle is, you see. Is it going strong like that? Or is it going sideways like this? Is this going sideways? If it's going sideways like this, that's not a good sign because sometimes it crawls and then it goes straight up. That's also true. So if it starts to crawl, because you know how to move your stops, that's important, right? Because whether it goes up this way and up or sideways and down, well, they both have a up move, you see. Whether the only difference is the angle, how strong it is. And yeah. So I would say right now, right here, you're looking for the buy, but this buy is not something that you can buy here and then exit over there. Because this buy could be like this, it could drop. Right? It could be like this, and then after it pulls back here as well. So you cannot buy this and exit over there. The idea is to buy it and then exit quickly, basically. Or over here. Just buy, take 30, 40 pips and go. If that's a trade that's of interest, basically. So over here, another pound dollar buy. So let's see what happened over here. So as you can see, when this one was going up here, basically there was this arrow down. And naturally, when he got here, I was interested in this buy. So basically, when this move actually came down, all right, this move could but it's actually the same thing as I was saying. It just goes up here. It could have either come down sideways or it come down sharp, but both of them would have a down move. That's the idea. Except that this down move didn't stop here. See, it went lower, and that's not something that I wanted to see, because if this came down sideways, then this is a good chance that it's actually going up. You see, so sometimes even though we may not know whether this is going to be a credit structure or motive wave, all right. The thing is that they will both go in the same direction. So yeah. So the idea right here is not to say, hey, I'm going to sell this and it's gonna fly down like thousands of pips. The idea is this is like it's a day trading style. So sometimes, like for Aussie Kiwi, you might buy here, you want to keep it all the way to the top, or and this is a daily, right? A D1 or something like this, where it's on the 60-minute chart, where you get in here, you sell here, you exit there. Then you broke the low, you put a new trend line. You have this trend line also going up. So if you got the top around here, 1, 2, you saw it down here, you get out here, because this structure as is right now, to me, is unclear. Long term, it could go both ways. It will become clear once this one does something like this, pulls back. That means now I'm gunning for the upside to break this. See that? So as it is right now, this piece is unclear. Right? All right, so let's go. The silver. Let's just do this last one, silver. I think this one also, yeah. Correct. So this one was discussed earlier. So we're looking for a downward move. We're looking for a downward move to prove the upside. So this downward move instead became that. Right? So if this happened to be all the correction and this was sideways, this would be the buy, basically. So somebody said, why don't I take the sell on this one? Well, because it could have been strong or it could have been sideways. Well, because in this case, it felt this looks like the motive is the upside. So naturally, I prefer the upside for silver. So I don't really want to trade what I think that the bigger move is to the upside. If it's a 1, 2, and then this is a 1, 2, 3, man, if you get caught, it will not be very good. Start to panic once it gets up here. It could be that. There'll be a long, slow, painful drawdown, and then you just playing defensive all the time. Then you could move up again. So I didn't really. I'm not interested in the sell, but now that it does that, I'm very interested in the buy again. Okay, let's look at this dollar African. This is something interesting because it didn't really go as far as I hoped. Okay, right now as it is right now, nothing much I could do about this. Because even though this was that, right? You see, it actually came down and it broke the low. So if let's say you took the buy, actually what you stopped out, the stop would have been here. So, and this did not even come down like this. It came down so straight down. So because it's a strong move down, you're just gonna wait to see what we get. You're gonna wait for more waves before we can even decide whether it's going up or down, right? One strong move, there's not much you can do. All right. What else? Yeah, let me see. Let's look at. You still got some time. Maybe another 5 more minutes. Let's look at silver. So silver. Oh, this one. Let me see what happened. 707. Okay. This means something like a running flat, I believe. Let me see. Yeah, ultimately it still came down in the end, but it's pretty ugly though. So let me just erase that. So the idea for this, of course, you guys just look strong, right? So you're looking for a B wave for this to come back down. So in the end, but B waves sometimes they are tricky like this. Instead of doing this, they end up doing this. So that's the difficult part of trading because um, you know that stuff does happen sometimes. Well, it happened over here, and what I was thinking was that this would come somewhere over here, and then this would still be a buy. So, but when this one actually went up to the top here, and it came down here around this level, I was actually looking at it for a buy, basically. And then it continued down. So in which case, because it continued down this way, it broke this low. Any thoughts of it being a expanding flat like this? So that was gone. So right now, we just have to. My at least my thought process would be to draw trend lines and then see what we get, basically. So this looks like it did something like that. 1, 2, 3, 4, 5. So if this one goes up, pulls back slow, worth a try. You may pull back again. Start to go up. Silver right now being at $15, I think, if it starts making bullish waves to the upside, I think, it's a good time to look for the buys. So that's the latest. Let's see what it does. Okay, let me see. What's this? This was a forecast for dollar. Basically, I wanted this sell somewhere around here. We need to drop sideways for it to go in. And what it did was it went to break this period stop. Not surprising. Remember, we spoke about if you want to sell, we take out the stops. So if people are in a sell, the buy stops are over here. So if they have to buy high and we can sell it over here, right? So if they buy high, we can sell high, then we can buy it low, right? So, yeah. Okay, so pound cat. Okay, pound cat. So the idea is to price action. Don't touch it here, but try to look for the sell once it has done enough time. So yeah. Okay. And let's look at pound yen. Also, these trades take about 2 weeks for them to actually play out. So this one also was 1, 2, 3. Okay. So that's self-explanatory. Dollar cat, last one. So all important zones. Could I say it's going to do that? Come and break this low. It's kind of premature. This is kind of like a reaction type of trade. So I don't confuse reaction trades with swing trades, because even if it came here, well, it could always have done that, make a double top. So you took a sell here, and then you got to exit, right? Because for swing trades, again, are not reaction trades, right? They're completely different. So they have different styles of entry, different take profits. So and there you go. See that? So you have to sell. So here you gotta exit. You gotta exit, because just because we get an entry here does not mean that that's going to happen, right? That's not the way swing trading is done, right? So okay, hope that shares some thought processes that go on in my head when I try to generate trade ideas. Let me just see what pound yen is doing. So now is Singapore Asian session. Let me just have a look at this. I like to look at the 5 minutes as well. The daily is important, but 5-minute trading sometimes can be quite rewarding. 1 second. Okay, so let's go look at this one. Okay. Now pound yen, so this looks like that it could make one more down. So you got to be careful of these levels like that. I did take a little buy over here. The reason for that is because this looks is trending up. but I'm looking for it to come around here. From here, the stop is over here. I just want it to reach this zone and then I'm out. I'm out. Basically, take about 17 pips over here, basically, right? And because it's Asian session, I'm trading a 5-minute chart for the pound yen. Let me see. Anything else? That's basically all I'm looking at. Let's look at one last one. Let's see what gold is doing. Okay, so looking at gold, this looks upside. This looks like what they call an Elliott wave. They call it a 5-wave structure. This looks like a possible 1, 2, 3. This could be a 4. Could be looking at one more wave up. 5. So the thing about taking the 5th wave is you don't want to take it when it breaks the top. You have to take it when it's somewhere at the low. All right. So you have something like this. I think this is the lowest point. So basically, trades like this, you really got to take on a very low time frame. All right, you got to go on the 5 minutes and try to take it as this is kind of crawling up here. See here? So as this is kind of crawling up, you want to take it somewhere when it's crawling up. All right. Your stops naturally have to be below this certain amount of pips below because you have to decide how much is this worth to you. And then that is your amount. So you want to earn that much, and then you want to risk that much. This should be around 2% of your account, right? Of course, if it does something like that, and then it does this, that's even better, right? And that means you risk this much, you hope to get that much, basically. And this 5th waves, they are always tricky. Tricky to trade. Sometimes you get it, sometimes you don't, right? Like. But right now, this one, if you're asking me to trade, I'll be interested in the upside, definitely. Not so much interested in the downside for now, unless this one does something strong like this, maybe. And then around these levels, well, I'll still be interested in the buy actually, because even if it does something like this, and when one more down, well, this correction remember it could be either sideways or it could be strong. So, but they both move in the upward direction, right? So, anyway, for right now, I'm still interested in this with upside. So you need more stuff here, and it's done on the 5-minute time frame. This type of entries are done on the 5-minute time frame. The general direction is on the daily, but actual execution and confirmation is on the lower time frame. Because if we can aim small, we miss small, right? All right, that's it. We're going to take a break now. So trade safe, yeah?